Hi there, I'm Paul Waldie and I'm joined by Tim Pickering. He is the president and CEO of Auspice Capital based in Calgary. We're talking oil now. Tim, what about the price of oil? It's kind of been bouncing around, still below, right around $50. Where do you see oil headed?
It's hard to say. There's a lot of factors here. Don't have a crystal ball. When we look long term, we're very optimistic. This is a situation where we don't have a global lack of demand for oil. China, whether it's 7% growth or 6%, there's growth there. So there's demand. What we have is an oversupply issue, and that's different. That's actually positive because it reacts and it adjusts.
Mm-hmm. All right, now let's talk about the different pricing going on. A lot of people know about the West Texas intermediate price, and we've got the Brent price, but there's also a Canadian price. Tell us a bit about that one.
Yeah, so Western Canadian Select is a heavy sour blend, the bulk of which is exported to the U.S. We are the largest supplier of oil to the U.S. At 3 million barrels a day exported from Canada, we're actually twice the next competitor, and that's Saudi Arabia, so it's a significant amount of oil. And we're the third largest oil reserve in the world. So this is a big deal, and the irony is most people don't know what it is, and so part of our effort is to create an awareness around that.
All right, now traditionally it trades below the West Texas price.
Correct.
What's the usual ratio though? $10, $12? Is there sort of a?
Yeah, 10 to 20 bucks. It's been in that range. So it can move around. At the end of the day, the spread goes up and down based on refinery demand is one of the key things. And one of the key points with Canadian oil and heavy sour oil is there is a significant amount of refinery demand for this type of oil, this grade of oil, which is kind of lost at times. People think it's heavy sour, it's not in demand, refineries don't want this, hence the discount. The opposite is actually true. This is the primary input for much of U.S. refinery demand.
All right, now you guys have come up with an ETF based on this. Tell us a bit about it. How does it work?
Right. So the ETF tracks something called the Canadian Crude Index, which we also publish. The ETF was looking at the other ETF products in the oil sector, all WTI based, and saying where can we make improvements to give the investor not only access to the Canadian market, which is not accessible other than this product, and how can we make this product better?
And is it out now? Is it trading? Or is
Yeah, so the product launched May 12th, so we've been out for a number of months. I think at this stage we're building awareness in the product. We've had interest. We had institutional interest out of the chutes, and we've had some significant volume recently. So we're quite happy with the process, but it's an awareness building process.
Okay, all right, Tim, we got to leave it there. Thanks for joining us.